So generally speaking, the economic cycle, and I'll use the ISM survey, Institute of Supply Managers survey from the US as the best guide, has been subdued. So even though we've had equity markets and stuff very strong, the economy's been subdued. So normally a growing economy, you should see the ISM above 50. GDP's actually been reasonably good, but there's something going on in the kind of manufacturing sector that is still sluggish. So the cycle has still been relatively slow, which has created this bifurcation of like tech stocks, which are not based on, debt dynamics or real world expenditures. It's a very separate kind of cash flow that they're earning. The traditional economy has been sluggish. Globally, Europe's slow. They haven't picked up yet either. The UK is a bit of a mess. Canada's slow. And then we go to China, and China's got a full-on debt deflation playing out. So bond yields are collapsing. They can't stimulate because their currency's too weak and they don't want to lose control of their currency. Everybody's desperate for the US to weaken the dollar because the dollar's way too strong for everybody. So the strong dollar usually slows the global cycle. Now, Trump's coming in. The probability is he'll do the same as he did last time, which was the dollar's too strong because the US needs to export goods. And a strong dollar means less exports, which means a larger trade deficit. So we're kind of a little bit in this no man's land where everything is slow. All the forward-looking indicators of the economy are suggesting, because the liquidity that went in and financial conditions over the last 6 months, they tend to be forward-leading, suggest that the economy should pick up significantly this year. Now, China's the one problem child. We have to, as I said, see the dollar weaken, but also the Chinese need room to stimulate. So then they can try and stimulate their economy. Now, the reason they're seeing this debt deflation is the same that we've all had similar issues, is too much debt, aging population, doesn't generate enough GDP growth to service the debts, and what you get is this big problem. And they've got it in the real estate sector, much like we all had back in 2008 and 2012 in Europe. They've got it in the banking system, much like everyone had in 2008 and 2012 in Europe. They've got the same set of problems because their demographics just are falling off a cliff.
Bitcoin sentiment has been wavering, with fear and uncertainty dominating the market. Currently trading around 94,500, Bitcoin has faced repeated rejections above the 100,000 mark, leaving traders unsure whether this dip signals a deeper downtrend or presents an opportunity for accumulation. The latest rejection on January 7th has intensified bearish sentiment. But history shows that crowd fear doesn't always predict market outcomes. Also, social volume data from Sentiment revealed a spike in selling activity, mirroring a similar occurrence in early December. Back then, Bitcoin rebounded to reach an all-time high of 108,300. This time, an 8% drop since Tuesday has kept fear levels high, but a potential liquidity sweep below 92,000 could trigger recovery. Additionally, macroeconomic factors like a rising dollar index have weighed on Bitcoin's bullish momentum. On-chain metrics offer a more nuanced view. Both Bitcoin and Ethereum's 30-day MV/RV ratios are negative, signaling losses for short-term holders. Yet the 180-day mean coin age for these assets has risen over the past 3 weeks, hinting at increased accumulation and reduced sell pressure. This trend suggests the current dip could be a buying opportunity. Another factor to consider is the declining open interest, OI, since mid-December, which has fallen from 13.7 billion to 11.72 billion. This drop in speculative activity highlights waning short-term enthusiasm. While this reinforces bearish sentiment, it also suggests that by the time on-chain signals turn bullish, Bitcoin's recovery may already be underway. For traders, the key decision lies in whether to take the risk and accumulate near the 92,000 support.
Yeah, I don't have any structural issues with the US economy. I think that bifurcation of the two different worlds people live in is real. Don't forget the average person is dealing with very high mortgage rates, very high credit card debt interest rates. They're dealing with still low cash flows from their regular businesses. We're not talking about tech giants here who are changing the world. We're just talking about people who run small local businesses. It's still not great. And we have to get rates lower and stuff for that to happen. And the inflation, yes, the rate of inflation's come down, but the price is stuck. It's still sticker shock every time you go anywhere for dinner. You're like, oh my God, how did this happen? These prices have doubled. So that's a real problem. And what we need is the economy to grow. Now, Trump and his team know this. Scott Bessent is somebody I've known for a long time because he was an ex-hedge fund guy, and he's a friend of mine. I haven't spoken to him for a while, but he understands what needs to be done, and that's we need to get growth. So growth to me is, yes, you need to get interest rates lower. Yes, you need to get the dollar lower. Yes, you need to stimulate the US economy. You need to deregulate the economy. So all of those things on a forward basis suggest that the economy will be much stronger. Whether GDP changes much below, trend rate of GDP growth roughly is about 2% or just below it. We've been trending higher recently. Do we go much higher? Do we have a few periods of 3.5% growth? Maybe, probable. When you have a new administration, there's tax cuts, there's all of that stuff. You tend to do that, and Trump is very driven by the economy more than anything else. So I'm optimistic. Do the Europeans manage to get their shit together or not? That's a different issue, because they are doing the opposite. They just keep increasing regulation, increasing tax, making it harder for people. But they have the difference, they have a social security net. So it's a different structural system. And then we do need China, because China buys goods from abroad. They don't just sell them to us. They also buy stuff from us. And if they're on their knees with their economy, they're going to be buying less goods. So we need the global economic system to get fired up. So we need the US Trump to do what he's suggesting he's doing and allow the Chinese to figure out what they need to do.
Bitcoin's price has fallen to approximately 94,000, marking an 8.5% drop from its January 7th local high of over 102,000. Currently trading below its 20-day exponential moving average, EMA, Bitcoin's technical indicators suggest that bears are firmly in control. The Relative Strength Index, RSI, has declined to 45, signaling neutral territory, but reflecting a significant drop of over 20% since January 6th. Consolidation has been ongoing since mid-December, further reinforcing the notion of bearish sentiment in the market. Industry experts have raised concerns about the potential for a deeper pullback around President-elect Trump's inauguration on January 20th. Many traders view this event as a possible catalyst for a market-wide correction. BitMEX co-founder Arthur Hayes recently warned that a settle-off could occur if pro-crypto promises from the incoming administration fail to materialize quickly. He speculated that investors might liquidate positions purchased in anticipation of favorable policies, leading to heightened volatility. Despite short-term uncertainty, analysts like Hayes remain optimistic about Bitcoin's long-term potential, citing macroeconomic factors such as increasing government debt and global currency debasement. Similarly, CryptoCoin's CEO, Kai-Nung Ju, highlighted that the strengthening US dollar could influence Bitcoin's trajectory. Ju argued that while Trump's pro-crypto rhetoric is appealing, his administration's focus on bolstering the dollar's status as a global safe haven asset diminishes the likelihood of strategic Bitcoin adoption. For now, market participants are keeping a close eye on whether Bitcoin's recent dip evolves into a deeper correction or paves the way for renewed bullish momentum. Don't forget to like and subscribe, and let's keep this bull run going.